Okay. Did you folks at least hear my audio before? That was so. Did you folks at least hear my audio before? Oh God. Hey Anthony. All right. So as a matter of fact, I don't see my video on. There we go. The echo's back. Wonderful. No audio. All right. So let me start this all over again. God darn it. So, Will, hello. Oliver, hello. Franklin, hello to you, sir. We're going to go over Boeing. Suresh, hello. Nestor, happy Labor Day to you, sir. Amerimigo, hello. Chuck, good evening to you as well. Think the recent dollar strength is going to be a buying opportunity for precious metals? No doubt about it. Denny, hi, Bob. Hello to you, sir. TA, hello. Baba Pops, love that. I don't see Patrick on. If Patrick pops on, he's checking on the replay. Happy birthday, Patrick. He sent me a text of him and his grandkids today. Do you think this was the bottom of crypto? That's a question for Terrence. If it's a question to me, I don't think so. Been waiting for 10,000. TA, you got it at 10,000. That's the price target we were looking for. S&P is rolling over here a little bit. Still up half percentage point. This is a 1 minute chart though. RL, hello. Okay. Jedi! What do you mean they didn't turn out well? Nah, the Jedi sent me some shirts. I think it was on Thursday night. I went over it. I don't know if you were joined in. Did you catch the replay, Jedi? I shared your letter and your the shirts. I wore one of them, and I showed the other one that you had sent me. I really appreciate it. Thank you very much. I didn't see you on that night. Yancy, hello. How's the echo? Is it back, or are we good? Cool. Good to hear, Jedi. Thank you again. I really do appreciate it. Thank you. Okay, let's do this. Gary. Oh, so no more. What was it, Adrian? Right? Gary. It's a good echo. All right. And I got Chuck's telling me a bad echo. All right, I'll try to fix it again. All right, all. Let's do this. All right, so we have the S&P 500 open. Let's go to the 4-hour chart. Let's talk about what we're looking for here. We had an abbreviated session on the futures today. They did close up. We have broken out on a 4-hour chart. No retest yet. No retest yet. The Russell 2000. They have also, I believe, broken out. No, they have not broken out. Poised. But are up spot 88%. The S&P 500, we already did this. NASDAQ 100. Really took it on the chin last week. We have broken out. No retest. The dollar. The dollar up big. We have a 93 handle on the Dixie. Bonds. So bonds were hammered last week. We broke out, pulled back. Today, now they're going to try to rally them again. I'm very skeptical about bonds here. Therefore, if I believe that bonds are going to correct, I think that the dollar is going to correct as well. Let's see how gold is behaving. Gold closed up on the day earlier. It was an abbreviated session. We are up slightly. No breakout yet, but they're trying to. I'd be cautious here with gold. I like the way we closed out the week. We did hold the lower band of support on a weekly basis, but I'd still be very, very careful here. Bitcoin hit our price target. In fact, it overshot and recaptured the 10,000 mark. So, TA, I think you were wise to nibble. Wait for the retest. I think we may get it. And then if we get that follow through above this resistance level here, you can look to add more. Okay, so that's a quick overview. Well, if I have time, I'll come back and I'll revisit the futures. But we're opening up strong. The small caps lagging a little bit, but overall, things are looking good. Bitcoin popping off of that 10,000 mark, which we expected. And I'm glad we waited. Now, I want to talk about a change a bit. Let's see what the VIX is doing. See, this is VIX. VIX is up. It's off the highs of the session, but it's up nearly a percentage point. While the S&P minis are up just shy of spot 6%. You know, I tweeted this out this morning. We had the S&P 500 up, along with the VIX, which was up vastly more than the S&P 500. Ultimately, the VIX did fade a bit. But you don't want to see the VIX and the S&P 500 rally together if you're a net long, because it's a harbinger of bad things. So I'm very cautious right now on this market. And while I believe still, I've been fairly consistent on this, that I believe that we're going to rally into Election Day. I'm watching events unfold that, and I don't want to get political here. But I'll try to skirt around the politics because it's a very divided country, and I try to offend anybody. But if we wake up on Election Day and we do not have a concession out of one of the candidates to the winner, I don't want to be long of this market. Because I remember all too well when Gore retracted his concession from Bush during their election, and it was not a pretty sight. I think that the stage is being set vis-a-vis mail-in balloting. that is going to be an absolute and utter nightmare, even if it looks as though the president has won handedly on election eve. If you have, what I believe is going to happen here, if you have the Pelosi's of the world, the Bidens of the world, the Kamala Harris of the world saying, we still have mail-in ballots to count, and you have truckload of ballots to count going out 2 weeks, you could bet your bottom dollar the vast amount of those are going to be Democratic ballots. And it's going to be a lot of indecision, and there's one thing that the market does not like, and that is indecision to mail-in ballots. This was off of Zero Hedge. I shared the article. It's in the stream. Surveillance camera captures huge pile of mail dumped in California. I don't know if this has anything to do whatsoever. I don't know what was in this mail. All I know is that whatever government touches, it messes up. Government sucks at pretty much everything. They couldn't get the New Jersey race right. They had to rerun the Patterson race because of mail-in balloting. Still, we don't want to admit that, this doesn't work out very well. What's the very definition of insanity is doing the same thing over and over again and expecting a different outcome. But the nefarious part is that I don't believe that that's what's happening. I think that there are purposely going down a road that is known to be dysfunctional and hoping to manipulate the outcome of an election. Fast forward to this next article, The Coming Coup. And I've been reading about this guy here, John Podesta. He's a swamp creature out of the Clinton years. And he's always in the background. He's part of the Hillary Gate emails. He got hacked. He's just a swamp creature. And he's been wargaming how to manipulate the election, how to not concede the election. So these guys are, if nothing else, versus the Republicans. I mean, the Democrats are tenacious. Whereas you have the lambs, the lemmings on the Republican side, the president, that I have little confidence in that they're willing to fight back, and they'll probably be in certain sectors or certain areas in line with the Democrats wanting to go back to the good old days. So I'll let you read this article. I'm not going to go through it, but when I read articles like this and I see what's going on in the streets, and I see the verbiage coming out of the so-called leadership, the Pelosi's of the world, Harris's of the world, the Bidens of the world, and this Hillary Clinton, my God. Another video surfaces of her insisting that they not concede the election ever, under any circumstances, not concede the election. Does anyone have any idea what is going to happen to this stock market if we wake up on the 4th and we do not have a clear winner? I will not be long of the stock market. Maybe the gold mining stocks, silver, yes, but I will not be a net long of this stock market. So this is what I'm looking out for as we proceed into Election Day. Now, this is an article that came out on the 4th, and we need to pay heed to it. China to gradually sell off 20% of its treasury holding, may dump it all in case of military conflict, state media. So China, I believe, is now second to Japan as being the largest holder of our debt. Our debt is exponentially moving up higher. We have dysfunction in the streets. We have an election that is coming up that is surefire to be an utter and complete nightmare. I hope it's not. I hope I'm wrong. But the stage is set. Absent New York going the president's way, California, I doubt that's probably impossible. Maybe Washington going the president's way, and it being a vast, 1980 type sweep like Reagan did of the electorate. Absent that, I think that the Democrats are not going to let up. They have more lawyers than they have voters. So they're going to be fighting the outcome of this election. Do you want to be a holder of our treasuries in advance of this nightmare when you know you have the Chinese out there that are looking to divest 20% of their treasury holdings? Why they would announce it, I don't know. I would want to front run those orders. And you saw yields on this news, and technically, to be honest with you, technically, we've been talking about this for weeks. The 10-year yield weekly basis. On Thursday night, if you were here on Thursday Night Stock Charts Live, this candlestick was down below this lower band of support after we broke out the week prior. And I said on Thursday night, one trading day left to go. A lot can happen. What happened? We rallied and we closed just off the highs of the week. Still down, but when you get an indecision bar like this, brother, there's a very good chance that the path of least resistance is about to change, and it ain't down. We'll use this level here. We'll be watching for a breakout on, I should say a continuation breakout on the 10-year yield. And if yields rally, you're going to see sector rotation. We've been talking about this. What do we want to be long of? Not technology. Technology last week was a basket case, down 4%. What did well last week? Especially on a relative basis versus the S&P 500. The S&P 500 was down 2.31% on the week. What was up? Airlines. Airlines were up 1.52%. The hotel index, it was down, but it outperformed the S&P 500. What else did well? The banks, in particular, the regional banks. And we've been buying the banks for the past several weeks in anticipation of this exact price action. We knew it was coming. The market sent us a signal. We got a breakout here, a failure, another rally, new highs. We waited for the retest. We rallied, bought more banks. What else did well last week? Not the big money center banks, by and large, on the banking index, but in particular, this is a leveraged ETF. So the percentage, keep in mind, it's a leveraged ETF. I think it's 3 times. Yes, 3 times. The regional bank index was up on the week, up strong. What else did well? Caterpillar. The industrial names are doing well. So I think we're going to continue to see sector rotation out of tech and into the beaten down names. What changes that is if we see the president's poll numbers decline dramatically, if we see more nefarious acts on the part of the opposing party, or any party for that matter. Anything that raises a cloud over the outcome of the election is a negative, whether it be put forth by the Republicans or by the Democrats. I'm walking a fine line here. I'm trying not to get political. Yes, Buffett did dump more WFC. Yeah, I'll probably be short. I'll probably be short going into Election Day. Because if we rally into Election Day, we're already overbought. So I think it's going to be a sell the news event. Now, if we sell off in advance of Election Day, I may not get short or heavily short the market, but the game plan at current is to stick with what I believe is going to happen. Sector rotation. You'll see the Dow name moves, the large non-tech names move up higher. Airlines, hotels, manufacturing. What we have left of manufacturing here. And the one thing that concerns me is this, is when you take a look at the yield curve at current is poised to break out. And when you have a steepening yield curve, meaning you have yields on the 2-year, 10-year moving up higher, and those spreads widening out a little bit, that generally stocks do not do well initially in that environment. As you can see back here in 2000 to 2001, you had a steepening of the yield curve. What happened to the stock market? Tanked. What happened back here during the financial crisis? Yield curve steepened. The stock market is overlaid in blue here. I should have said that. My apologies. What did well? What do you think is overlaid in gold? Gold. Gold did well. Even with yields rising, gold did well. And this is a powerful chart. So, we are in very, very interesting times, as the Chinese say. Let's go back to some comments. All right. Heavy buying puts after election. You're probably better off, if you get a sell-off in advance of the election, wait until after the election. Take a pulse check of where we're at. What's the story with SoftBank? I think that S&P is worried that Tesla is a bubble. They're steering clear of Tesla right now. TK Jan, hello, sir. Hello, sir, to you. Silver, bullish on silver. We own it. I'm going to add more. Danny, yes, smash the like button for those just joining in. Thank you. All right, let's do some chart requests here. Let's go over Boeing. I want to talk about Boeing. And folks, by the way, before I forget, I'm going to be using TrendSpider. They're one of our sponsors. Please use that link below to get 35% off of TrendSpider. I don't know what happened in my other background for it, but this one will do. Okay, so TrendSpider, automated technical analysis. You have seasonality here. We're going to go to Boeing first. This is a seasonality trade. We opened up. I read an article on Zero Hedge about the production issues. I didn't read it yet on the max production line. So just be careful. But we did buy Boeing last week, small opening position. On Thursday night, I said, I want to see specific price action. And let's talk about what that price action was. Daily chart. Now keep in mind that this was Thursday night when we were talking about it. Huge, huge bearish candlestick on the day. And I said on Thursday, the replay is out there. Just go back to Thursday on YouTube. And I said what I want to see is a pullback, a drop, a gap down, and if they rally it to close back above support, I'm a buyer, and that's exactly what happened. So, am I going to go running in with both feet, adding more with reckless abandon on tomorrow? No, not yet. It's got to show us that it's worthy of being bought. I want to buy strength. So we're going to continue to build on this position. And what I like about Boeing is that September seasonality up 75% of the time. Drops down in October, then picks back up again in November. Good to see as we proceed into the new year. Can you believe we're talking about the new year? I kind of can't wait until this year's over. I never want to wish my life away. But man, what a year. So Boeing, I like a lot. I think the sector rotation is in play, and Boeing is probably going to see a much higher highs. I also like ExxonMobil. It closed out the week last week with a yield of just shy of 9%. I'm not ready yet to go buying it. Here's my wish list target price at around $36 per share. It may not get there. So Exxon, another one that we're looking to put on long-term hold. I would love to buy it at a 9% yield. Buffett rotated out of regional banks, net interest margin expansion plays, and bought a gold mine. Excuse me. I like the regional banks. You have a flood of people leaving the cities. You can't get a U-Haul. In New York anyway. So if yields proceed higher from here, you're going to see those last-minute buyers come out and flood into the market and say, you know what? I got to buy a house, lock in these yields now. And I think in the short term, for the next several months, the regional banks, Rocket Mortgage, which pulled back. We bought the dip on Friday. They had a decent earnings report. There's not much data here. It's a daily chart, fairly new issue, owned by, I believe, Quicken Loans. I think Quicken. Here's a 4-hour chart. We held support. So I think that they sold the news here, and they were short-sighted. They weren't appreciating the fact that you have, on Long Island here, I mean, you're having bidding wars. We haven't seen a bidding war on Long Island for a home since before the financial crisis. So real estate is hot. People are leaving the cities. 48 of the 50 major cities are seeing riots right now. People want out. You have DAs refusing to file charges against these thugs. You have rampant lawlessness. I mean, who wants to be in that environment? So I like the mortgage space, and I like the banks short term. Longer term, I'm concerned about the banks. But net interest margins will help the banks out. Wow, I got a whole bunch of stock chart requests here in the members area. Okay, JPM for Robert. If I have time, folks, I'll go to the chat box, but I have to go to members first. We'll go to about 7 o'clock tonight. Monthly chart, JPM. Looking good here. We have a breakout. We were eyeballing 98.77. We closed above it. We did a retest early this month. So we broke out last month, August, pullback retest, holding support. I think it's a buy. I want to test my annotation skills. Here's a breakout above another resistance level. Let's throw up monthly trend lines and support lines. Okay, so if we rally up and through 105.30, that's another area to add to JPM. Assuming that we close above 98.77 and close above 105.30, let's call it on a weekly basis. And I think that we can head up here to 118.84 before we see some real serious resistance on JP Morgan weekly chart. Good week last week. We sold a little bit off the highs of the week, but what I think we're setting up for are higher lows on Stokes. We've already broken out on RSI. We broke out back here in June, July, rallied, pulled back. Let's call it a retest of the breakout point Now it appears as though we are ready to head higher. So we're gaining momentum on JPM. And we closed out the week up. Where was the S&P last week? Down. Relative outperformance. And this is what we've been waiting for. Daily chart. Closed down Thursday, Friday. Right at resistance. I want to know if and when we break out above because JPM is the pimp Mac daddy of all banks. You could argue BAC as well. BAC had a great week last week. So, hat off to Mr. Warren Buffett on that call. Keep this active for the week. And we're good to go. Set it and forget it. Let's overlay the monthly trend lines on the daily chart. And you can see, here's monthly resistance all the way up here. So we stand to make a nice profit if we buy the breakout and we rally up to resistance at around 118 per share. So JPM looking good. I would buy on a breakout and a close above this resistance level at around 103.52. You want to make sure it's going to close there. So buy last minutes of trade of the day. EQX is the next chart up. Equinox. This is not the gym. It appears to be a gold company. Outside reversal month so far. Month isn't open. Over. Weekly chart. Outside reversal week. The week is over or was over. Not a good week. I see no compelling reason at current to go buying. Now, if we manage to hold this volume shelf here, this support level at $12 per share this week, then you have a reason to go opening up a position, but I would use a stop loss right below last week's lows. Because if we break below the support level, we're probably coming all the way down here to this support level, and that's going to have a 9 handle on it. That's a big, big loss. So stay small, tight stop. You want to see this thing hold $12 a share. Daily chart. Big break on Friday. Big, big break. So these lines here are significant because while they represented the lower band of support in prior days and in days gone by, they're now going to represent the upper band of resistance, or upper bands, I should say. So just be forewarned, you want to see it hold. As a matter of fact, I'm going to lower this a bit. $12, not $12.01, $12 a share. Now, beware. If they gap it up tomorrow morning, beware your Stokes. Beware your stochastics. What are they doing? They're declining and they're down below 50. What happens when you have Stokes down below 50 and you have a stock that's rallying? Rallies tend to fade. Don't chase the rally, please. Wait for it to pull back. Let's see if it settles down. Let these Stokes get resolved. Do they flatten out? Do they begin to hook back up? That's what you want to see. Right now, we're losing momentum. Don't let them bull trap you into this thing. All right, they'll spike it up tomorrow morning. Don't get suckered in. It doesn't matter where a stock trades intraday. What matters is where it closes. So be careful. Interesting setup. $12 a share. Must hold. If it doesn't, it's going down to a 9 handle. Next chart up, VVPR. Vivo Power International, monster stock here. Let's go to a monthly chart. You can't buy this stock. This is one of those stocks where I lay out my this doesn't end well comment. It's not going to end well. We're extremely overbought relative to the third standard deviation Bollinger Band. We're already well off the highs of the month. Weekly chart. Yeah. So this is the power of having automated trend lines. On a weekly basis, we closed out the week last week above the third standard deviation Bollinger Band, and click of a button, resistance above. So be careful here. I think we're going to pull back. Daily chart. Where's our RSI? RSI is at 84.19. I think that we've come a little bit too far, too fast. You may see some support down here at around 857 per share, 850 per share. But given the weekly, here, let's do this. Let's overlay weekly resistance on the daily chart to illustrate what we have to deal with. Here's weekly resistance above. So be very, very careful about this stock. It's already very extended. If you're planning on opening up a position, your risk reward is horrible because you're opening it up just shy of weekly resistance. And on a weekly and monthly basis, you're trading above the third standard deviation Bollinger Band. If you're looking to short it, different story. That's a different story. I don't know what the short interest is here, but if anything, it's more attractive as a short to me, especially if they gap it up. And what I want to see is a gap up, lower high, and then a breakdown to a new lower low. Breaking down, let's say that they gap it up tomorrow, they rally it through Tuesday. We fail to take out the highs of the 4th, lower high, then we break down below the lows of the 4th. That's a confirmation breakdown on an intraday basis. That means that in all probability, you're going to see a deluge of selling. So be careful here. I like it from a short perspective. I hate it as a longer term. It's probably going higher. I mean, it's a good looking chart. It's just come too far, too fast. Not bashing it. Next chart up, DAR. Darling Incorporated. And if I can ask you folks, if you could please smash that like button. It helps me out so much. Follow me on YouTube, Facebook. I'm spending a lot more time now on Facebook, Twitter, etc. All right, DAR. Let's get off the 15-minute chart. You know what? I'm here. 15-minute chart, you're right at resistance. Be careful. That doesn't mean you shouldn't buy it soon, but just know where we're at on a 15-minute basis. Let's go with the monthly chart. Do we have data here? We have enough data. And the data is telling us that we've had a really nice run and that we're coming off those highs. I'd want to know if we pulled back and retested support. We'll keep this active for a few days. It's a good looking chart. So I would not chase it here. Let's go to a daily chart. We broke out on Friday, so it certainly showed relative strength. But I still wouldn't buy it. I think what's going to happen here is that you're going to get a retracement. Let's overlay. Is it going to show? Drawings. Some drawings are too old to be painted. Do we have weekly or monthly? I'm sure to say monthly. No automated trend lines on a weekly and monthly basis. All right. So we're on our own here. All right. So what I would do here is the play. This is a nice wedge formation. I would want to see a pullback and a retest of daily support and I want to make sure it closes at that support level. Let it bounce around. Let it do a retest here. Bounce around at this level. I would not buy it here. We close out the day on Friday. Very extended relative to the third standard deviation Bollinger Band. Loving Stokes, loving RSI. That doesn't mean that it can't pull back. And a pullback should be welcome. You want to see this froth come off. You want to see this breakout point here retested because it was resistance for so long. Now you want to see if it acts as support. Technical guys like me, we watch for that. We feed off of it. So we want to see this act as support. Then we get excited. Again, Stokes, RSI looking very, very good here. Next chart up. We have WFC, Wells Fargo. Nestor, you contrarian animal, you. WFC. Daily chart looks pretty good. Nice reversal day. Horrible week. Let's pull back. Let's see where we've been to identify. Oh, this is Wayfair. Embarrassed much, Bob? Okay. This is the right chart. All right, monthly chart, Wells Fargo. I was wondering why that chart looked that way. All right. It's got a mountain of overhead supply to get through, as noted by these volume shelves. You know, so far in the month, we've rallied off the lows. The Stokes, you could see that we're putting in a double bottom, but we haven't hooked up yet. RSI has hooked up early in the month. All the monthly chart is conclusively telling us right now is that we have a ton of overhead supply above to work through. That's not changing. The fact of whether or not we give up the gains in the month, that can change. Not a bad week. 2 weeks in a row up. It was up last week with the S&P 500 down. Again, early we were talking about the banks. We're bullish on the banks. I'm not a lover of Wells Fargo. Way too much negative headline risk out there. I couldn't buy Wells Fargo until we pulled back and did a retest of support at 24.11, and I would stay very, very small. It's a scratch the itch trade. Get it out of the way. Then I would become a bit more aggressive here. I want to reduce this sensitivity considerably. All I care about is a breakout above that resistance bar. And in fact, I'm probably going to move it up. And this is how we trade, right? We scratch the itch on pullbacks. And then as we begin to see, once we're validated that our trade is right, our call was right, then as we begin to break out, then we'll begin to add more, put on more risk, because the market's saying, hey, you got it right. All right, good. Buy more now, because you have the market behind you. Especially if volume bars begin to pick up. Let's take a look at seasonality. And those folks just joining in. TrendSpider, the charting software I'm using, 35% discount code below. Take advantage of it, please. Seasonally adjusted, going back 15 years. September, we are up 63% of the times. And in October, an astounding 73% of the times over 15 years. So we're heading into a seasonally strong period for WFC. And there are a lot of hold ratings, which is an equivalent of a sell on the stock. So the reason why I don't look at analysts to decide whether or not I want to buy a stock because they upgraded, I could care less. What I'm looking at are how many opportunities do we have analysts to change their opinions from sell to neutral or to buy? We have a ton of opportunity here. So while many people would look at all these holds and sells with a few buys mixed in as a negative, I view it as a positive. This is a potential for positive headline news in the future. The bad news is already out by the analysts, unless they come out and they say, we're reiterating our sell rating on WFC, then who really cares anyway? So I think the probability of some good news coming out by the analysts, especially as we go into a seasonally strong period, rises dramatically. They know this data. These guys know that bonus season's coming up soon. They don't want to look wrong. They're looking at this. Have this data at your fingertips. So I think that WFC will perform with the banks, probably underperform, but perform nonetheless to the upside. And when things really get rocking on Wells Fargo, is if we were to close above this volume shelf here, because what you have setting up is a W formation. Here's the left side of your W. We rallied back here. This is a daily chart, so the pivot point, the center of the W, was on August the 12th. We've pulled back since then, obviously. Now we're building the right side of the W. If we break out above this pivot point, well then, we have this volume shelf in the rearview mirror. We've now broken out and above the pivot point. Now the path of least resistance really begins to change and momentum begins to build. And the Stokes are already telling you a story. They're breaking out to new higher highs after putting in higher lows. This is what trading is all about. If you want to get long, higher lows and higher highs. It's pretty simple. That's Wells Fargo. What else do we have? OPES. I was asked about silver. We're long of silver. Eric popped in. No, it wasn't. It was Tommy popped in. AGQ. I should know that a little bit better. I'm long of it. Into the request box. We'll go over that. That'll cover silver. OPES. I can already tell you, I like the chart. But this is a daily chart. Let's stay consistent. Let's go to the monthly chart. We've broken out on a monthly basis. Not a lot of data here. Actually, we do have a lot of data. It just really came alive back here in April in terms of price action. Do we have any more data? No, we only have 3 years worth of seasonality data. That's not enough for me. Weekly chart. Beautiful breakout last week, showing relative strength versus the S&P 500. It was up over 11% when the S&P 500 was down over 2%. That's what you want to see. Stokes moving up higher. RSI, perfect. Higher lows, and now higher highs. We broke out above this pivot point. Daily chart. Here's my play on OPES. I like this stock a lot. I can't buy it at resistance. I'm going to select all three of these for a reason. And I'll go over it in a second. All right. We'll keep this active. 15 minutes is good. I'm going to keep this going twice. Okay, so let's do a hypothetical. Let's war game it out. It's a beautiful chart. What are the futures doing at current? E-minis, S&P E-minis are up. They've gained strength since I began recording. What if they gap it up tomorrow? Do we go chasing it? No. But I'm going to get an alert that fires off saying we broke out. But the reason why I added to break through, touch, bounce, I want to know when we pull back down and do a retest. I'm not chasing it on a gap. I'm not doing that. I'm not going to short it, but I will wait for the pullback and a retest and the filling of the gap at the support level. Then I would open up. If we poke our beak out at the close tomorrow above this upper band of resistance, I'll put some risk on. I'll take some shares, then add more on a successful retest of support. I like the chart on multiple time frames. Good looking chart, showing relative strength. I like it a lot. AGQ, next chart. This is silver. We own it. On Friday, silver showed relative strength versus the S&P 500 and versus gold. So on the month, horrible month. However, we bounced. It's hard to see. Let's get rid of this line. All right, we bounced. We retested support. We bounced. Weekly chart. I don't see a compelling reason on a weekly basis to go buying anymore. At current, I'm going to check in with the dollar really quick, see what it's doing because it matters. Still strong. In fact, let's see if silver is shrugging off the strength in the dollar because they usually trade inversely of one another. Where's my silver? I know I had it up here. Oh, sorry, folks. Here we go. Silver's up nicely. It's shrugging off the strength in the dollar. Very bullish stuff. The upper band of resistance is coinciding right with the 20-period moving average, just shy of it. I'd like to see us hold this current, what should be a current support level. I'd like to see it close above that mark in green. This now becomes support. I don't see a compelling reason at current, despite the fact that it's showing relative strength, or I should say, shrugging off the US dollar strength, to go buying more. I'm certainly open to it. I haven't gone over the daily chart yet. We have broken out on RSI, validating the breakout on price, assuming that we hold this breakout. So silver's looking good as we proceed into the new trading week, but it's on thin ice. Let's go back to TrendSpider daily charts. Again, for folks just joining in, 35% discount code on TrendSpider, and it's free to our silver and gold level members. Daily chart. All right, so what's important to remember here is that this prior support level is now going to become resistance. I'm going to add breakthrough because I might consider stopping out if we do break through. It all depends upon the dollar. Other than that, I don't see a compelling reason to go buying more right now. We have a lot of resistance above as represented by this volume shelf. Should we break out and above 61.23, I want to add more. I would want to add more there. I'm satisfied with our current position. I want to build more. A retest of support would be great. But at current, we have both lines on Stokes down below 50, fading. Rallies tend to fade. Let's not forget that. So I'm in no rush to go adding more quite yet to silver. Longer term bullish, short term cautious. Quite yet. Patrick, happy birthday. Rocket I went over earlier, JA. I'm bullish on it. I'll blow through some symbols I'm going over here. LMND. Lemonade. Wow, this thing broke down hard, huh? Wow. You know, there's no compelling reason to go buying it right now. It's a little bit oversold relative to its third standard deviation Bollinger Band. RSI, that could still go lower. It's in its low 30s. Let's go to a 4-hour chart. Inside bar on Friday. I don't see a compelling reason. You may get a pop here, but clearly the path of least resistance longer term at current is to the downside. Here's the monthly chart. I mean, there's no floor below at current. You know, on a valuation basis, sure, I'm sure there's a floor on a valuation basis, but at current, we have no historical data to tell us where there may be buyers. So in a case like this, I would avoid it. And quite possibly, I wouldn't short right now, but if we rally, put in a lower high, you'd want to look to short into that lower high. Square. These are the COVID plays that were working. I don't like it. I think you're coming down here to 125.11. On a daily chart, we bounced, but I don't think the selling's done here. You may get a 1-2 day reprieve, but there's been a lot of technical damage done here. This is what you call a breakout point failure or a bull trap. We broke out here technically on the 31st, continuation move higher on the 1st, failure to hold support on the 2nd. That's bad stuff. So I think that you're going to need to at least see another retest of support, see whether that holds. If it does, maybe you have a setup there to enter with a stop loss right below last week's lows. Other than that, I see no compelling reason to get involved with this stock. SE, C limited ADR. Don't like it. Outside reversal week last week, topping action. Lower high in RSI. Daily chart. Your Stokes are really losing momentum here. We're flirting with the 50 mark. We closed out at 52.26. We'll be down below 50 probably tomorrow. Might we bounce? Maybe. 3 consecutive down days. We saw a big reversal tail. No, I shouldn't say a reversal tail. Bottoming tail. On the day, we couldn't close positive. I don't like the chart. I think that there's a very good chance that we make lower lows this coming week, and you have a gap to fill down here. It may act as support at 134.78. But keep in mind, if we get down there, your Stokes are going to be in like disaster area land. You don't want to be buying stocks when these Stokes are weakening so much, down below 50 and losing momentum. Apple. I said Apple was a sell on the split, standing by it. Big outside reversal week last week. You know, might they hold it up a few rounds? Sure. Because the daily chart, we did flash a reversal on Friday. Buyers did move in. What was the low of the day? 110.89. I think it's a watch. If it trades within this ascending wedge formation for the next several days to the next couple of weeks and breaks out above this resistance level at around 127 per share, maybe we'll make another run at the highs, quite possibly. But the question is, at that point in time, do we put in a lower high or do we break out? The test is always at the top. If we fail to break out and we put in a lower high and we break down below last week's lows, it's all over for a long time with Apple. I'm not a bull on it by any stretch of the imagination. I haven't been for a while. And I think that stock split was the nail in the coffin for Apple. Penn National Gaming, I owned it. We booked profits. We booked profits way too soon. I'm pissed at myself. I haven't wanted to look at the chart. I think it's going up higher. Ultimately going up higher. But I just caught something that bothered me. We're losing momentum on Stokes. Where do we close out on Stokes? We're weakening up here on Stokes. They can still be salvaged. If we see a hook back up on Stokes, I'll breathe a sigh of relief. Before I talk about the daily price action, let's go to weekly price action. You can't buy these shares at current. We're trading just shy of resistance. I think we may trade within this trading range for a while. Or that's the ideal situation. Or it simply breaks out. I mean, I like the stock. I should have stayed long the stock. I don't like the Stokes. If we break out, I would be fine with opening up or adding to a position. I don't know whether or not I would buy it until the issue with the Stokes are resolved. They need to begin to hook back. They need to hook back up again, flatten out and hook back up. Ideally, break out. This is my problem with the stock overall. We're losing momentum. So just be cautious here. No great rush to go adding at current. Apple went over. I'm going to leave off with CNK. I'm going to call it a night because I'm starting to fade here. And if you folks just joined, if you could smash that like button, I'd really appreciate it. Subscribe to the channel. Thank you very much. Cinemark Holdings. Let's pull back. See how much damage was done here. A lot. But we broke out on the month. Stokes higher lows, RSI higher lows and now higher highs. We're trading above a volume shelf right here. You want to see it hold 1542. That is critical support at current. We broke out. The week before last, we had a continuation move higher last week. Daily chart. All right, so looking at this chart without the automated trend lines, I would say this. There's your upper band of resistance. We're holding support. We broke out here on the second, retest 1, retest 2. I'm not big on any more than 3 retests of support. On 3 retests, I get nervous that support may not hold. So I'd want to see a breakout here really quick. Now let's overlay the automated trend lines. I would buy on the breakout, and I would wait for the final minutes of trade to make sure that we're going to get a close above that breakout point. This upper band of resistance will be just that. I kind of let the cat out of the bag. This upper band here is going to be your new upper band of resistance. If you're going to trade it, look to book your profits at that support level. Otherwise, just stay long. I think that the chart is, a lot of damage has been done, but it's beginning to recover. So overall, it looks good. Pat, I may or may not be tomorrow morning. Not quite sure. I have so much to do going into the end of the quarter. So I'm kind of exhausted right now. And with that, folks, I want to say everybody have a great night. Thanks for those likes. I really appreciate it. And everybody have a profitable trading week. Pat, happy birthday to you. And great photo of your grandkids. You're a rich man. And thanks for joining me tonight. Be well, folks.